Our next guest has been vocal about his concerns over implications for the weak dollar. Keith McCullough is president of Research Edge. He is a former portfolio manager at Carlyle's Blue Wave hedge fund, and he is a contributing editor to Bloomberg Television. Keith, so glad to have you with me here on set. So let's talk about the dollar and gold. Gold, sort of the bubble, and can we say the dollar is an anti-bubble?
Anti-bubble, the bombed out buck. We've moved from breaking the buck to burning the buck. Now we're bombing out the buck, the anti-bubble. It's consensus, suffice to say. But I think the point that you just made on gold is a good one. We're on an immediate term basis, I think, into month end, with so many hedge funds pushing this thing higher, and we're getting closer to where my target is, at least, which is 1190 on gold. I think the immediate term bubble case for gold is definitely right there.
Do you feel like trading momentum-wise? I mean, one trader told us earlier this morning the gold market is just trading on its own. In other words, nobody quite understands exactly why. I mean, of course, we can link it to the dollar's weakness, but this is a pretty fast acceleration.
Yeah, and I think that at the end of the day, the Fed is the only one who can stop it. So everyone who says that there isn't a bubble in gold won't disagree until the Fed pops the bubble. So as soon as the Fed makes a signal in terms of rhetoric or actually moves on interest rates, then you're going to see what, a bubble gold was. But until then, just happy to be bubble boys and girls all the way up.
The chances of the Fed making any noise soon seem to be quite low.
Zero.
Zero. All right, how's that for my chances?
Yeah, there's absolute zero chance. These guys are...
unemployment is over 10%. I mean, most people say they're not even going to begin to talk about anything until that number comes down from double digits.
Right, and the Fed sees no bubbles. They never have, they never will. He who sees no bubbles is what we call Ben Bernanke most recently in a note. And at the end of the day, you have a bubble in two things. You have a bubble in gold, an immediate-term bubble. I don't think a long-term bubble. And in the short term, in short-term treasuries, you have another massive bubble, and that's the bubble that he lives in. So living in that bubble makes it impossible for him to see it.
So let's talk about sort of the bigger picture implications. Is it just that investors can't think of anything else better to buy right now?
Well, you win both ways, because gold is, sometimes we say it's schizophrenic. You can win on the inflation side, you can win on the danger side or the Armageddon side. So gold is this perfectly reasonable thing to tell your investors that you own a lot of, particularly as you mark your book, as a lot of people do, into month end and year end.
Yeah, I was assuming there was some sort of year-end play on the trade. So I know about your target. Some we've seen even $1,300 an ounce by the end of March. It's a little bit more aggressive than when you stand, but right now it seems like that's maybe not as far-fetched as it once sounded.
No, and I think you mentioned it to me once. You said 1,300, and I kind of smirked. I'm not smirking anymore. At the end of the day, it could happen. And the only thing that could stop it from happening is the Fed. That's it. It's that simple.
So the dollar down, down, down. So are people continuing to sell the dollar because they hate the dollar, or are we seeing a little bit of a shift maybe in sentiment where maybe some other currencies are beginning to be loved a little bit more?
Yeah, I think there's a lot of love for a lot of other things as opposed to the dollar, but at the end of the day, the Fed's balance sheet last week went up again, another $80 billion. It's debt upon debt. You talked about debt issuance this week, another $118 billion in treasuries this week. The Fed's balance sheet's $2.2 trillion and growing. That's dollar bearish.
All right, so we're going to continue. Do you think we're going to see that 150 level versus the euro sort of break and hold? That means we're going to see tons of European tourists here over the next few months going shopping. Everything's on sale.
That would be great.
Off.
It'd be great for Tiffany. It'd be great for New York City. But at the end of the day, it's really bad for a lot of other people. And the dollar, if it breaks this level, we're going into uncharted territory. The only other time we've broken below the 74 level is right before the stock market crash. So we're going into what I'd call the danger zone.
All right. Well, we're going to continue the conversation. Keith, you've been good enough to stay with us. So Keith McCullough is going to be back in just a few minutes' time.